Hi, my name's Johnny and this is my YouTube channel, The Part-Time Investor. Now, a few weeks ago I set up a stocks and shares ISA with Trading 212, and if you want to see that, I made a video about it last week. You can go and check it out. Anyway, after setting up my ISA, I thought I'd share my views on the different ISA options for investing and saving. First things first, I am not a financial advisor. Please don't do anything that I say. Go do your own research. This is just for a bit of entertainment and guidance. So ISA stands for Individual Savings Account, and it's basically a way to protect your income from savings or investments from tax. But it's a little bit more complicated than that. There are 4 different types of ISA. You have a cash ISA, you have a stocks and shares ISA, you have a lifetime ISA, also known as a LISA, and an innovative, I can say that word, finance ISA.
Inevitable.
As of 2020, you can put in £20,000 into an ISA each year. You can pay into multiple ISAs in the same tax year, but not more than one of each type. For example, you could put £10,000 into a cash ISA and £10,000 into a stocks and shares ISA each year, but you couldn't put £10,000 into 2 different cash ISAs. Now, a cash ISA is probably the most popular ISA, and it's pretty much just a savings account where you don't get charged on any interest you make. And you can get cash ISAs from pretty much any bank or building society. Now, from a tax point of view, it's important to note that even outside of an ISA, you do have £1,000 personal savings allowance if you're on a basic rate of tax, or £500 if you're a higher rate taxpayer. What this means, if you're a basic rate taxpayer, at the current interest rates, you'd probably have to have about £70,000 worth of savings before tax even becomes an issue for you anyway. So personally, because I don't have that level of cash saved, I just look for the best interest rates in any savings accounts, whether they are in ISAs or not. I personally hold over 3 months worth of living expenses in a savings account. That means if anything happens, if I lose my job or there's some sort of emergency, I can access that cash. I'm not going to have to access cash that might be my stocks and shares ISA that might not be the best time to take that money out of the market. So that brings me on to the stocks and shares ISA, like the one I set up with Trading 212. This will shelter your investments from income tax from dividend payments and also capital gains tax for any growth in the value of your stocks. But again, like cash ISAs, the government does give you allowances, so you don't necessarily have to put in an ISA straight away. You get a dividend allowance of £2,000 a year. So as an example, if I put all my money into a Trading 212 invest account rather than the ISA account, I'd have to have £50,000 invested at a 4% yield to even get taxed on it. You also have a capital gains allowance of £12,300 a year. Now, capital gains tax is a tax on any profits you make from selling an asset like stocks and shares. In order to go over your capital gains tax allowance, you'd either need to sell stocks and shares in the same year that you sold something else like a second home, or you'd have to have a relatively large amount of money invested, or been invested in the stock market for a long time. And none of those points currently affect me. So in reality, currently it wouldn't make any difference whether I put my money in an invest account or an ISA account. However, given that the Trading 212 ISA is free, it made sense just to put my money in there and start building up my allowance. Now, even if you do have money in a stocks and shares ISA, there's still some tax that you can't get away from. The first is stamp duty, which is charged at 0.5%. So when I recently bought some stock in Shell, I had to pay 37p in stamp duty. Given that it's just 0.5%, it's not really an issue unless you were looking to trade stocks very, very frequently. It's also not charged on foreign stocks. Now, another tax I hadn't really considered before looking into this is withholding tax. Now, withholding tax is a tax charged by foreign tax authorities who don't really care whether your investment is an ISA or not. And in general, the UK has agreements with other countries for about 15%. As an example, I've bought American Express stock, which is traded on the New York Stock Exchange in America. So before that dividend is paid to me, 15% will be taken off in American tax. Now, the tax would actually be 30% unless a W8 BEN form has been completed. I know, super catchy name. Now, as far as I can tell, when you sign up for Trading 212, they automatically complete that for you. I haven't actually received any American dividends yet, so I haven't checked that fully, but I will update that when I find out. Now, 15% isn't really a killer for me, but it's certainly something to consider when investing in foreign stocks, especially for dividends. On a side note, if you are interested in setting up a Trading 212 account, whether it be an invest account or an ISA account, you can use a link below. That will give you a free stock up to the value of £100, and why not get that bonus? Also, I get it, so it helps me out. The next ISA option is a lifetime ISA or LISA. Now, these either help you when you're trying to buy a first home or saving for retirement. How it works is you can save up to £4,000 a year and the government will give you a 25% bonus. So for instance, if you save £4,000 a year, you'll get £1,000 extra in your account. That might sound too good to be true, but there are a lot of rules around it. For instance, you can only use it to buy a first home. You can't have owned another home before. Now, if you do access that money for any other reason than buying your first home or after the age of 60, you are going to be charged 25%, so all that benefit will get taken away. Personally, if I was saving for a first home, then I would definitely be investing as much as I can in a LISA. For example, if you were saving for a house and you thought you needed a £20,000 deposit, you could pay into a LISA for 4 years, paying in £16,000. The government would give you 25% of that, so £4,000. So you'd be able to save £20,000 1 year earlier than you might otherwise have done. Now, there are two different types of LISA. There's a cash and a stocks and shares LISA. Personally, if I was saving for a house, I wouldn't risk the stocks and shares LISA, given that the time period you're saving is probably not going to be that long. However, if you're saving for retirement, then a stocks and shares LISA might be better. I haven't invested in a LISA yet, personally, because I'm not saving for my first house, and I also pay into a workplace pension, so I don't really need it for a retirement fund. Given that I could only access my money after the age of 60, I'd rather invest in a stocks and shares ISA and be able to access that money earlier than that if I wanted to. But if you work for yourself or freelance and you don't have access to a workplace pension, then it's definitely a good option to look at. If you are interested in a LISA, then I can recommend the Money Saving Expert website. It has a lot of good information and calculators to help you work out whether it's going to be any good for you or not. And lastly, and I think least, is the Innovative Finance ISA. Now, this lets you invest in peer-to-peer lending instead of cash or stocks. And basically, you lend via a peer-to-peer lending platform where you can lend to people and small businesses who don't want to use a bank. Now, the headline interest rates for these is about 6%, which doesn't look too bad, but there are risks involved. For instance, the person or organisation you lend to could default on the loan, or the platform itself, as has happened before, could go out of business and you lose all your money. Personally, investing in an Innovative Finance ISA is not something I'm looking at doing in the short term, as I'm still trying to get my head around stocks and shares, and I don't even want to think about peer-to-peer lending. So that's a brief review of the ISA options that are out there. In reality, I probably didn't need to put my money into a stocks and shares ISA, but given there was zero downsides to doing it, why not? And in the future, I probably will end up putting my money into cash ISAs and maybe even a LISA at some point. If you did find any of that information useful, please like and subscribe. I'm going to be trying to make a video every week looking at my steps or missteps into the world of investing, and also pass on any information that I've picked up along the way. That's me. See you later.